What's up, guys? Welcome back to my channel. If you're new here, make sure to check out the links down below. Check out my podcast called Michael on the Mic and our private investors community where we do daily live streams. We just started those. Today we're going to talk about CCIV and their merger with Lucid Motors because we have a lot of news here. They actually had lied to us about what was going on with the company, with the merger for a while. And news came out of this the other day, causing the stock to take a pretty big hit. Just in the last couple of days, in the last 5 days, the stock is down about 20%, which is really big. Earlier today, it was down over 20% at one point. And this is really big considering just a couple of weeks ago, the stock was at $60 a share. It had dropped all the way down to about $30 a share. Now it's gone down even further to $23 per share. So a lot of people are wondering why this is happening. Is Lucid Motors still a good stock to invest in long term? But really, the main thing we're going to go over today is why the stocks are taking a big hit. And the reason for this is because earlier in the year, on January 11th, Bloomberg, they had reported that Churchill Capital was in talks to merge with Lucid Motors. And the way the article said, they made it sound like they were already in talks, things were already going well, and that there was rumors that the merger would be happening. However, just yesterday, the CCIV filed an S4 with the SEC detailing its merger negotiations, what the timeline was, what was going on with the merger. And the company said at the time that the article was published, Churchill Capital and Lucid Motors had not had any discussions with respect to a potential business combination. So they had not spoken about a merger yet, even though the Bloomberg article said that there was already talks about a merger. And the way they made it sound was that the merger was really going to happen. And that's when we started to see the stock price take off. Right when that article came out, the stock went from $10 a share all the way up to $21, $22 a share overnight. And they're saying now that they weren't even in talks yet. Nothing had really happened. And subsequent to the Bloomberg article, Churchill Capital began exploring a possible business combination with Lucid due to its interest in the electric vehicle industry. So they're saying nothing had actually been spoken about a merger, a business combination, and that's pretty surprising to people. And that leaves a lot of people pretty worried. This news coming out made a lot of people a little less confident in just what is going on between CCIV and Lucid Motors. It doesn't change anything about Lucid Motors, what the business is doing, but people don't like being lied to. And while it wasn't Churchill Capital or Lucid Motors' fault that this article was reported, it still has an impact on the stock price. So really, whoever wrote the Bloomberg article, it's their fault. But ultimately, that's why the stock price is dropping right now, because it dramatically revises the narrative of those merger negotiations, and it has investors just a little more uncertain about what is going on between the company right now, between both companies right now. So this was why the stock has taken a big hit just in the last couple of days. Obviously, the stock has dropped from $60 a share to about $23 a share, and that was mainly because of the merger. Once the merger was confirmed, that's when we saw this happen. Right now, post-merger, the stock is valued right around $25 billion. So this has a high valuation, but they have big plans moving forward. High risk, high reward investment could go either way right now. Long term, if you think that their energy storage business, their second life, the plan they have for their batteries after they take them out of the cars, you think that their bidirectional charging, their SUV, their vehicles, if you think all of those are going to be doing well long term, they could potentially be a major competitor to Tesla, well, then it's a great investment. But you just have to remember that this company is high risk, high reward right now. You have to be comfortable in holding this stock, in my opinion, long term if you invest in it, because it could fluctuate 10-20% in any given week, up or down. So let me know what you guys think of Churchill Capital, what you think about this news, about the merger and what was going on there. I still think this is a great investment long term. at about a $25 billion valuation, and really just best off buying the stock, not even thinking about it for a couple of years, checking back on it then. This isn't a stock you're going to want to watch every day because you could see these major fluctuations. But let me know what you guys think. I hope you guys enjoyed today's video. Don't forget to get your 4 free stocks, each valued up to $1,600 when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you guys in the next episode.